What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the NASDAQ, the QQQs, and the futures, break down what the charts are telling us and what you should be watching for tomorrow, and why tomorrow is going to be a very important day for the overall stock market as the market is starting to sell off very hard. Before I break anything down about why tomorrow is going to be big, why the market is collapsing right now, and what you should be watching for, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free AMC share, a free Tesla share, or a mix of all of them. The offer ends in 3 weeks. Check it out before they run out. With that out of the way, let's get on with the video. The market is just tanking right now. In my previous video, I told you the market might see a bit of a bounce. We did get the bounce in the very beginning, but this ended up being a bit of a bull trap where the market pushed up. A lot of these bulls got trapped up here. Then we just got smacked all the way down as the hours passed. Now, a lot of this has to do with the 0 day to expiration options. This also has to do with fear as we approach the jobs report tomorrow, and also because of a lot of banks beginning to capitulate. We're seeing lots of banks taking huge hits like JP Morgan right now. That's a result of what happened with the yield inversions. So for the market, did we get the bounce? Technically, yes, we did, but it did not last as long as I thought it would. I thought this would actually hold up because of market makers. We'd hold like 399. We ended up just tanking from there. That was actually a little surprising, but that's okay. I also told you guys that the market does have more downside for like the medium term, and we are likely starting a very, very vicious cycle. I'm saying this because the fear is going to come. And even if you haven't been shorting like up here or even like at these levels, there's still time because I believe the market has a lot of downside to come. And I think people have to be ready. Now, I'm going to talk about the charts a little bit more in a couple of minutes, but we have to talk about tomorrow. Tomorrow, 1 hour before the market opens, we have non-farm payrolls. The market wants this to actually be low. We don't want too many jobs being created, too many jobs being accepted. And then we have unemployment data coming out, the unemployment rate. This is also super important. The market wants this to be high. We want high unemployment and low jobs being filled. That's what the market essentially wants. If unemployment is hot and we actually see this at a pretty hot place, the market could try to bounce a little bit, but overall, I don't think it's going to change too much. But if unemployment is once again low or very close to expectations, the market could actually tank even more. Why is unemployment so important? That's because of Jerome Powell and the Fed. The Fed is going to be looking at this data for February, and they're going to be raising rates based off of that. They're going to be pricing in a lot more things. And the Fed is doing this because they need to cause pain in the employment sector. They need to cause more unemployment. Why? To slow down demand, to bring down inflation. That's what their priority is. To do so, they have to cause pain. It's very unfortunate, but it is the truth. We need pain. They have to do what they have to do, and we just need to be as patient as possible during the process. So what do I see happening? I really don't know what's going to happen tomorrow, exactly what the data will tell us. But at this point, it does not matter because look at the setups. Let me look at the daily on SPY. Remember this trend line I was telling you about yesterday, the descending broadening wedge resistance, the white line right here. We were rejecting off of this over and over and over again last year. Then we broke above it. People became excited. And what's happening? What's happening? We're getting very close to testing it. Could we try to bounce off of it? Maybe. But to me, it's looking like the market's very weak. We have lots of bearish momentum. The bears are coming in. They're getting stronger and stronger as the days go on. We're likely going to see a big drop very soon. It also depends on CPI, but like I said before, the odds are favoring a bit of a crash starting, a big drop. We actually broke below the previous low. This is looking pretty bearish. Now, how could this whole crash play out? Could this be crash wave 1? This is crash wave 2. Like an Elliott wave count, we can actually do that. Let me just show you what I'm talking about. On an Elliott wave count, sorry, when you look at, let me find it, my polyline, you can actually draw out a count like this. This could be our 1 from an Elliott wave perspective. R2, we could be forming R3 right now. We might just see a vicious crash like this to form R3. Then there's a 4, and then after that there's a 5, and that could essentially end where the crash goes to. But there should be one more line here. So we basically could come all the way down like this over the next couple of weeks. That's very possible. See the market bounce and then get one final big drop going into like May or so to new lows. That's very possible. We make a move like this. And on top of that, this is looking like a possible head and shoulders that developed. That is a possibility. We could also be forming a giant head and shoulders, like right here. What else could be happening is the market is going to tank hard, get a small bounce, and then tank even more. So we could even be forming a possible, a big drop here, all the way down to 375 over the next like week or two. Get a bounce, maybe a small bounce, and then just collapse from here to a new low going into like May, all the way down, where we kind of continue from there, right? This, could be like a giant head and shoulders development. This could be like a left shoulder, head, right shoulder. It's all very possible. But the bottom line is we're looking pretty bearish, guys. We really are. We're already down to like 390. We're looking really bearish. Not looking good. Tesla, man, it just dropped pretty hard. Going into tomorrow, it all depends on so many factors. We're failing at 173. We're likely going to come all the way down to 170, man. Tesla also looks really bearish to me. Look at the hourly time frame on it. Actually, I think the daily would be a lot better. On the daily, Tesla got a very big PPO crossover. The bears have the main momentum right here. Tesla's looking very weak. We're likely going to crash and fill this gap down in the 140s. Apple, I don't think 150 is going to hold. I'm seeing it filling the gap way down here. 145 very soon, even lower than that as time goes on. It looks very distributive. This is looking like a crash. It's actually starting to look like it. Triple Q, I mentioned to you guys this thing could get a bounce. We got a nice push up to 300. This was a trap. All right? Even the best traders could get trapped sometimes. And this thing looks like it's going to come all the way down to 288. And if that doesn't hold, it might just keep going down to the 270s. Yeah, that's not looking good. NEO failed at $9. It's going to likely continue dropping. Man, the market just looks really, really bearish, guys. NVIDIA, this is looking pretty bearish. I'm seeing this thing falling to 230 or even lower than that, into the 220s. Giant gap, not looking too good. Once again, it's all telling us the same story. On the daily, the dollar has broken out as the Fed has continued to tighten. The breakout is telling us the crash was coming. It looks like we're getting started and we have more room to go. We're still looking more bullish on the dollar than bearish. I think the dollar is going to keep going as we do see a tightening of financial conditions, thus bringing the market down. VIX is at 22. VIX is now popping. This is just what you want to see during some sort of crash. VIX looks like it's going to take off. Once again, bearish for the stock market. SQQQ, same thing, up 5%. It's going to likely keep going. Let's see this thing break above 40. Same thing, guys. 10-year treasury yield came down a bit, still is a little low. We do have a gap up here though, and we're actually holding 39 pretty well because this thing has been up for quite a while. It's been popping for quite a while. It's likely going to bounce, fill this gap around 40, might even keep going from there. Like I said, guys, we're getting a lot of bearish signals. The market is getting close to oversold territory, so we could try to bounce a little tomorrow. Small bounce. I'm not even counting on it being too big. It's looking super bearish. I'm seeing SPY hitting the 380 soon. People are going to start capitulating. The crash is most likely coming soon. That's as simple as I can make it. Please be ready. Remain calm, cool, and collected. I'll see you guys in the next one. The market's at the moon because the long-term future is still very, very bright for the long term. For the short term, be ready for pain. Big data coming out tomorrow. I don't even know if it's going to matter too much because the markets look very bearish right now. Thank you. Remain calm, cool, and collected. Peace out. I'll see you guys in the next one.